Okay, welcome everybody to this evening's XAUUSD Security webinar. My name is Duncan Cooper. Right, tonight's webinar is live Forex market review, so we'll get into that in a moment. If everyone can read through the disclaimer, that would be great. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. I've given you a link there. For those in the webinar, if you want to talk to me, use the webinar chat box or the Q&A box. I've got both open. So if everybody could just read through the disclaimer before we move along. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. And full-time Forex trader, been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. Through the week, you can connect with us at the website. Go to acy.com, go to the Market News tab, or our YouTube channel at ACY Securities Australia. If you want to connect with me personally, just head over to my Linktree page. You'll get all my links just there. If you want to get access to my chart layouts and templates for MT4, just contact Nathan.bray. His email's there on screen. I'll put that in the chat for you. Here we go. All right, so let's get into today's trading. Let's have a look at the news items for the day. So today is we're having, I'm just going to refresh this. We're having time shown on my time, Gordon time, and New South Wales time. So today we're having the flash manufacturing and flash service data for a number of countries. The Eurozone, French, German, we've had the UK data, and we've got the US data coming out at 11:45. In respect to the manufacturing service data, 10:30 p.m. we have the US unemployment claims. So there's still more to come. There's been a bit of a jostling around, certainly on the euro dollar. And then tomorrow from the pound, we have retail sales at 4 p.m. And getting into Saturday on the midnight, we have the US UOM consumer sentiment. So today, be aware at 10:30 p.m. 11:45 p.m. there's data that can definitely affect the pairs. All right, with that in mind, let's get to the charts now. First up, the US dollar. This range, which is actually last month's low to high, we're starting to hold above the 79% retracement. So it is just looking a little bit like we may have put a bottom in down here to move back up. And if you move to the weekly scale, we have a higher bottom, higher top on the weekly, and maybe we're putting in a higher bottom here at that 79% level. So if we continue up, if you finish with a very, let me just get rid of that fib tool. If you finish with a bullish candle, a positive candle this week, that may well be leading into another positive candle next week. And we may be putting in a higher bottom here on the weekly chart to move back up again. Okay. So I'm just going to put my fib back in on that range on the daily. And there is a weekly area of resistance over here at the moment that we're just kind of at 105.027. So if we're getting above that level, things are getting a lot more strong for the US dollar. So pairs to the US dollar, we're going to see maybe moving downwards, maybe into next week towards the end of the month. All right. S&P 500 is continuing to move up now. Got some minor higher bottoms forming here. This is the all-time high of the S&P 500. This is a bigger bottom, but a minor bottom here and a minor bottom there. So really getting long on this instrument, if you're prepared to be a trader at such high levels, is really just monitoring, I think, the 4-hour ranges. There's a current 4-hour range, looking for a dip down to the 62.79% area, looking for an opportunity to be, a buy on dip. We may not have a day down today. As I say, yesterday is the all-time high, so we may well just have another day up to fresh highs at the moment. Of course, the data from the news events of the day may push it lower, and that may offer, give you the opportunity for a buy. So I can see here on the 4-hour chart, there's an area of support here at about the 5303 area. That's within the 79% to 62% area here. So in that zone would be a good area to watch for a dip area if we can get a dip today. Other than that, if it keeps moving up, do you really want to be buying new highs? Probably not. You just want to be patient and look for a dip. All right, euro dollar. Earlier in the day, we have come back to this area. This is my 4-hour chart, but on the day chart, I said this on Tuesday, I was watching for support at 108.12 because that's daily broken resistance. As when we're moving back down here at the moment, that should offer some support in the short term. Whether or not it's going to offer support long term, because as I said on Tuesday, we have started to form a minor lower top. I get my drawing tool to draw. We formed a minor lower top here, just there. And we move down now to a lower area to this area just here. So it is maybe actually changing its trend here. And as I said on Tuesday, are we forming maybe a weekly double top up here? So on the weekly chart, give you the full picture. There's a weekly top here, and we've come up and stalled at that top. So are we going to see a long-term decline from that level? As I've just been saying, we're starting to see a lower top bottom forming. And on the 4-hour chart, we are lower tops and bottoms on the 4-hour chart. We're actually back up to the last broken level of 4-hour support. So potentially the last candle on the 4-hour charts just hit that, and we've actually tagged it on the new one. And that could be where we're putting in the intraday high today. Just actually had a 62% retracement of this range. So are we topping out there today to put in another move down? All right, lower top, lower bottom, rally to the 62, old support becomes resistance to move back down to retest that 108.12 level. So you could be looking on the 15-minute chart. For what do you need to see up here as your entry to get short? Could be waiting for the opportunity of a trend line break to form or something a little bit lower down, or you could be waiting maybe if this candle at the moment is a little bit volatile. Just want to check the news front. Don't have anything here at the moment, but that candle's looking a little bit volatile. Is if we do get back up to 108.43, there's that 4-hour area. 108.42. If we get another test of 108.42, maybe you just want to trade at 108.42. Stop above. So you can be watching. Just want to make sure it doesn't seem to want to sit on that low. It's 42.5. 108.42 was where we're holding at. Here we go. So we might see another retest of that area today. Can you maybe get a tight entry at that area to get a position to the short side in line with that 4-hour downtrend? And as I said on the day chart, we're seeing a lower top to a lower bottom forming as well. So whilst the most recent news has driven this up, it's just back up to a selling level within the trend that's been forming to the downside this week. All right, Euro Yen, it's testing. You go to the monthly charts with this bit of positive news from the Eurozone earlier in the day. Monthly chart, squash it in. We're actually testing this high. We false broke it a few weeks ago, and we're trading all along that high this week. So here's my 4-hour chart. You can see the tests that we've been having. We've had 1, 2. This is the third test. Not wanting to go above. That high level is at 169.95. Also from the most recent sell-off from up here to down, we're at the 79% level. So it is certainly holding there. So are we actually topping out in this area for a move back down the range? If you want to be aggressive, then Trying to get short as close to 169.95 as possible. We're at 169.86, so we're not that far away at the moment. Getting a stop above. And, this could be where we're topping out. Maybe for, a decline back down. Are we going to come back down and, re-challenge the low when we had the intervention back in the start of May? All right. It's definitely sideways here at the moment. Having a tough time breaking out above this area. So trying to trade as close to the top of that range as possible. Can we see a breakdown of that range? And if you don't want to get short yet, you might want to wait for a break of this range, then price to come up for that to be resistance. And we'll see if we can start to develop a downtrend down there. But at the moment, quite clearly, it is range bound, but we're at the top of the range. So in a range, if you want to trade the euro yen, it's in a range. So trading it from the top down to the bottom of that range, and can the bottom of the range break? Okay, euro pound, which has been moving down. Back down to supports. Now, it's already too late, really. If you were looking at this area of support down here, which is 84.98, I think that's a monthly level of support. It's most definitely weekly support. This is a monthly area, and we've got more areas over here to the left. It's very range bound at the moment, the euro pounds. So you have to be able to look at where the strong areas of support are, and we've most definitely come down to a strong area of support today. But we're already coming back above. Here's support. We're coming back above these lows. So it's just looking like we're getting reversal down here to trade back up. 4-hour charts getting aggressively up at the moment. I would start to watch for, we'll drag a fib across this range. Wherever it finishes, we'll wait for a dip. So wherever it finishes, wait for then a pullback to the 62.79% area to try and get a buy to trade back up from that clear rejection from the weekly support area. Okay. We can't go back in time, but I'm sure on the 15-minute charts, well, in actual fact, the reversal was coming from the news events that have been coming out in the day. So it was a bit difficult to get on board here, maybe with a trend line break. But most certainly, if you could just watch for a pullback over the next 24 hours on the 4-hour chart, then that may well offer you the opportunity to buy a dip. This is very much looking like this decline yesterday from when the UK's CPI data came out. Price is probably coming back up to fill this area today. But it'd be nice to be able to buy a dip for price to come up to fill that area. Whether or not a dip will offer itself today, we'll have to wait and see. But I would be, drawing a fib from the bottom, keep dragging it up if price keeps moving up, and wait for the dip to the 62.79% zone. All right, getting into the pound, which had a big push up yesterday. This is my 15-minute chart on the CPI data, but ultimately couldn't hold the gains, and it's looking a little bit negative today. Its data released today, I didn't look at the figures, but a little bit negative on the flash data. Predominantly the Eurozone data was a little bit more positive today, except for the French flash. So that's what's sending it down at the moment. All right, so let's just look at the day chart first of all. I've been monitoring this range. Coming back, I'm going to actually go to the weekly chart. I've been monitoring this range. We're coming back up to previous selling areas to the left. And we're just being able to hold above this weekly high. We're pretty much at that weekly high at the moment. So are we seeing a false break of that weekly high? Just to the day chart range here from high to low. That's the weekly range, but on the day chart, you can quite clearly see that the 79% level, we got a fraction short yesterday. And I'm always as well talking about imbalances. When we came down here through March into April, we actually created an imbalance on this daily candle, which is seen on the 4-hour chart. I'll just have to squash my chart in. There was an imbalance over here on that daily candle, which we should see on the 4-hour chart. And the imbalance was really more here. And if I just go from the top of that imbalance, well, the actual, let's just draw that in 100% accurate. Be from the bottom of that candle just there. Put my crosshairs in, you'll see that price action came up right to the starting point pretty much of the imbalance yesterday. Once it got up there, then it's been starting to turn around ever since. All right. So you can spot these imbalances where they are. Price will often come back to them, you know, a good month or two later. This is March 21st up here, and we're May 23rd. So we're 2 months later, we're coming back up to fill that imbalance, just short of the 79% level of high to low. Are we topping out up here to now come back down long term? All right, so what we're seeing on the 4-hour chart is lower top, higher bottom, a lower top, forming, starting to maybe want to come down to form a lower bottom. So we're starting to see a little bit of a change here. It needs to break really for me at the moment. This is the monthly high of last month, 127.09. This could still be support. We're pretty much trying to trade below that right now as I'm talking, but this could still be support today. Be nice to see a clear break below that level today. Just want to see where that line's a little bit hidden now. I'm just going to take that line off. The major area to consider at the moment, if you're bullish and you want to get long, you want to see pretty much 127.09, this high holder support. Can you see you set up to buy up from that level? But over the last week, we've been getting shadows on these candles in that area. Big shadow yesterday. Nothing changes today. There's more shadow on this candle. We're probably going to see 127.09 break. As I say, got lower tops to a lower bottom now on the 4-hour. So this could still bounce up though from this area, but it's looking a little bit weak. If we do bounce here, rather than get long personally, I would be dragging my fib down this range and then looking for a rally back up to the 62.79% area to look up here for a short. And let's say this bottom's here right now. There's old 15-minute areas of resistance here. This would be a perfect level to look for a short if we rally back up. Now, I don't know whether we're going to do that, but if we did, that would be a good area to watch today. Now, that being said, it would be nice to see a clear break back below now 127.09, like a clear drop down below. So we don't have any question that this area is support, and then seeing that area become resistance over the next few trading days. So we're going to need to see price action develop itself a little bit. But the 4-hour chart is most definitely starting to form a downtrend. I would just like to see, going back to the 4-hour chart, I would like to see a clear break below here. So there's the lower top. If we could, take out these lows to the left, there's 1, 2, and 3 lows here, and then see a rally back to the area to be resistance to confirm the turnaround. All right. Because that area could still be support. As I say, if you're more bullish than I am, then you want to be seeing 127.09 hold, and you could be looking for, a lower time entry to get long. But it's just starting to structurally on the 4-hour chart there turn over, I think. But I think we want to see 127.09 break convincingly, and then a rally back to, and that may not happen this week, may happen next week, and that might be the level we have to watch next week to get short. All right. Pound yen. So on the day chart, we're getting all the way back up. This was the intervention move back down. We've been going all the way back up. Still waiting to see if we're going to maybe see some exhaustion and rejection up here or top out. So I'm a little bit on the fence at the moment as to whether this is going to stall or trade through this high. I'll have to wait and see. If other yen pairs start to turn over, and like the likes of the Aussie yen has turned over a little bit more, Euro yen's very range bound at the top of the same kind of area. For our chart at the moment, it's still in an uptrend here, so it has just had an outside spinning top candle, which is often a culmination at the end of a run, but it would be nice if we are topping out up here. You know, if the pound dollar breaks 127.00 convincingly today, then this may well top out up here. So structurally at the moment, it's still in an uptrend. Your fib would be drawn from this higher bottom to top. So if you're bullish, you want to be looking for your 62.79% retracement. And then looking at that area for a turnaround. So structurally at the moment, it's still bullish. I don't know if I would want to be a buyer up at so high levels at the moment. So I'd be more inclined to be sitting on the fence and seeing if we get a structural change to the downside there on the 4-hour chart, especially if the other yen pairs want to turn over to the downside. You know, the likes of the euro yen, which is sideways at the moment, as I've been discussing here, which is sideways at that monthly high. If that structure breaks, we'll probably see the pound yen move down as well. So don't trade them in isolation. Okay. All right, Aussie yen. So as I was saying on the Aussie yen, this is my 4-hour look. Let's just go to the daily. It's in a similar area to what the pound yen is at, but it has started to just a little bit turn over. We actually had an outside day to the downside yesterday. So we went up and then down. So it's just formed, if you put in the minor swings on the day chart, it's actually formed a bit of a lower top because it came down from that high to that low, traded up to the high of that candle because we had a day up and then a day down. So it's just starting to say, if you're watching it carefully, we're topping out at the moment. Is it going to be a long-term top out for a long-term move back down? We'll have to wait and see. All right. Just want to put that fib back in so I know where the 79% level is. So for our chart is, you know, it's moved back below the 79. It's pretty much at the 79 at the moment. So, I mean, wouldn't be the worst trade in the world if we're thinking this is turning over to sell at the 79% level and, you know, selling at 79, stop just above here, or you could just be going just above here for a positional play to see if we're going to be moving down to this 127 extension, or at least back down to test support down here and trading back into these areas of support that have been forming over the previous months. So the 4-hour chart for sure has turned its bias to down. It's been range bound, a bit like the euro yen, but then to a lower bottom. Is it coming up to form a lower top at the moment? So if you draw a fib in from that top to lower bottom, you could be watching this range up here. We can see this, have a look at this on the 15-minute. You know, does it come up to the 62% level or the 79% level? Does it start to top out at those areas for a turnaround? All right. If I was watching this myself, I would probably pick the 79% level and just see what's to happen up here. Intraday today at the moment, this is the Asia high. We couldn't get above 104. 79% levels at 104.22. So that would be my preferred area just because it's a lot higher up. So it offers you a better risk reward, high level to trade from. And there is a slight imbalance in here on the 15-minute chart that may want to get filled as it started to go down yesterday. So that would be, you know, getting up towards the 79% level. However, 104, we can't trade at 104 today. So watch Asia high up to 104 first of all. I think if we trade above 104, we may well get up to the 79% level. So that's the first level to watch, 104. If you break above there, watch up here at 104.22. All right, the Aussie had a nice sell-off yesterday. Just to the day chart. Been monitoring this range and it's failed at 62% level. So in my mind, what I think may be happening is prices obviously come up. It's taken out this high, these highs, these old highs, but orders would have been sitting above these areas, liquidity. The market's come up to take out all that liquidity. That's been absorbed. There's no more buyers. And what we might see now is this come up to this previous area here, the 66.48 area, which was holding the market before some news coming out to drive it up. We may well see a revisit back to 66.48, but that may well hold the market here now to move down because we've actually put in a lower top. We came down, up, which came down to there, up, down to here. So we may well come back up to this zone now to hold, to come down. So that would be the area we'll be watching at the moment, 66.48 for a rally. So on the 4-hour chart, you can see we've had a nice drop. It's overextended on the 4-hour, so expect a rally. You know, if I drew a fib from that range, you can see we came up to the 62, came down at the moment to the 162 extension. It's overextended. Draw your fib now across this range. Look to the 62.79% area. 62 is at 66.52, and you've got the 66.48 level I was just discussing, which is last month's high. So that would be my area to watch, 66.48 to 66.52. Yes, it could come up to the 79% level because that's the higher level of resistance at 66.67. Just go back to the day chart. This high here, this weekly high over here. Price could, yes, come back up to that level too. So a couple of areas that we've moved above, fallen back below. One of those is probably going to be resistance on a rally. So those are the two levels to watch. Starting to change its structure to down. And long term, we may well be seeing that, you know, we've had this long-term move this way. Are we flying at the 62 to, you know, once more come back down this way? All right. We'll have to wait and see. So I will just be watching for that rally to occur at the moment. We could actually get up there most certainly today if the US dollar news later on in the day wants to bring it up. Okay, getting to New Zealand yen, which is remaining very bullish after yesterday's interest rate decision, which didn't have any change, but the verbiage must have been relatively positive. Right, it's heading maybe up towards, just going to squash this in. Don't know whether it can get up to here. It's 97.75. Well, as I keep saying, we're most definitely in the historical sell zone of the New Zealand yen, but it is still holding up. So I don't know how many people really want to be buying at such high levels, where historically, once we get into these high levels, we totally reverse back down the chart. All right, so monthly chart, weekly chart, they're all in uptrends on trends, and the day chart is in an uptrend. It's actually put a higher bottom in here at the moment, potentially. It did reject though yesterday, rushed up after the interest rate decision. There's a big wick there at the moment, and we're coming back up in that sell-off area of the candle. So if we can't take out the high, if we can't trade above that high, we could just get up very close to it and then we stall. We could see a top out and a move back below this 95.37 level. Because prior to the news of yesterday, 3 days here, we were struggling at that high. So whilst the euphoria of whatever sparked that move up yesterday for the New Zealand yen. How long is that euphoria going to last? This is very long in its move up at the moment. Would have to think we're getting very close to the end of that run up at the moment. If you draw a fib across that range, 96.84 is a 127 extension. I mean, it could get up to that level, but once you're getting into this area between the 0 and the 127, you're in the profit taking phase of the area. So is it really where you want to get long? All right, let's have a look at the 4-hour chart. If we trade below this red candle, most certainly this is starting to look like a lower top is forming up here. So depending on your viewpoint for the New Zealand yen, I think it's very high up at the moment. So with that in mind, I'm not prepared to be a buyer at this level. I would need to see maybe a signal to go short. Not seeing a signal yet. I would actually much prefer to see price action this high over here. I'd like to see structurally that this actually broke back below. It'd be great if it came down, took out this and this, then came up to retest this and hold. Could actually come up there and form some sort of left shoulder head. Right shoulder is going to take a few, if that's going to happen, it's going to take a few trading days for that to happen. All right, so at the moment, it's not in an area where I want to buy. I started to see price action develop itself to the downside. Great. If it doesn't, I'm just on the sidelines. Okay. New Zealand dollar. Said this on Tuesday, price action may get driven up after the interest rate decision to once more retest the 79% level. What did happen yesterday? Came up for that retest. Rejection. So we want to be monitoring this candle at the moment because long term we may be failing here. For that kind of pattern. All right, so monitoring that candle yesterday, go to the 4-hour chart, I would be watching the 79% level of the range. That's getting back into these highs. All right, so that's at 61.36 to the 79% level. 61.39 are those highs. So 61.36 to 39, that would be certainly the area to watch, and certainly we could retest that area today. We're only, 20 pips away. We could certainly hit that area today. All right, if the US news drives it up there later in the day. Quite clearly, we failed up there 3 times. So if we come up and fail once more, you have to know that you're at resistance up there. All right. There is as well, I'm just going to take off that fib. If you're more bullish, we are getting support from support here. Of course, we're not at that level, but we could, over the course of, I'll go to the 4-hour chart, over the course of the next few trading days, this could just, stay here, a bit sideways. It could come back to this area and hold once more. There's some form of range here at the moment. If you're more bullish, we could come back down here. You could be looking to buy down here for the possibility of a break above the 79% level. So what is your viewpoint of the New Zealand dollar? Are you a buyer or a seller? So depending on what you are, you want to be either looking to buy at support or sell at resistance on that pair. Okay. Dollar Canadian. Support's definitely coming in from my area of support down here. This higher line here at 136.31 now that we've moved up, I would be starting to watch a pullback to that area for support. Actually came in on the 4-hour pullback here. Just going to move this box. So back to daily. So in this area here, these two lows here, that's at 136.31. So the 79% level is at 136.39 of this 4-hour range to the upside. And then you got support at 136.31. So that would be the area that we'll watch. Can we come back into support once more and hold? That would be a perfect area to watch for supports. We've also got these highs to the left. I'd expect support to be there if we came back to that area. 79% level at 136.39, down to support at 136.31 there. For then another move up. Okay, dollar franc. It is at resistance up here. The big question is, I think, if we're starting to see pairs to the US dollar move down, then is it likely that we're going to see the dollar franc move down from this resistance here? Of course, the news that comes out later in the day could spin that on its head. So all we know at the moment, it's very much range bound. Support's down here, where we've been getting support at 906, and this is where we false broke resistance, just in this zone here. All right, so we're at resistance. We're in the 62.79% rally area of this decline. So if you're bearish, this is your sell area, forming some form of maybe left shoulder, head, or right shoulder. Okay, this area that we're looking at the moment, 91.47, is an area of resistance from the weekly chart back in time, which it's been holding at. Came above, failed. It is getting rather range bound though. Support's holding down here, but we could just stay range bound over the next month. It just keeps on doing this if it wants to. All right, so it's at resistance at the moment. Is it time to sell there to move back down support? All right, so look at gold. Back down to 79% level of the range that I was monitoring the other day, to the day chart. So yeah, that's a minor swing point on the day chart. That's the major swing point. So of that range with the 79, it is worth looking across this whole range. Just want to see that on the 4-hour chart. Still a good level here on the 4-hour chart for gold. We've got support here, which coincides with this area over here. See that? So this area, $23.51, so approximately $23.52. 79% level here, $23.57. There's a bit of a large drop down through here and imbalance up here that potentially needs to be revisited back up to the upside. So on the 4-hour chart, in any event, the trend is down on the 4-hour chart, but it's up on the day chart. Is this movement down here on the 4-hour chart is way overextended. So you would expect, in any event, if I just take off this fib, is this isn't the place to get short because of this overextending move down. If you think we're long-term moving down at the moment, you want to be monitoring a retracement back up to this area here, just short of the 79% level. That would be the area to watch to sell if you thought we were moving much lower. This is already overextended to the downside. It's really coming in to fill some imbalance that would be on this candle on a lower time frame. So shorts need to look for a rally, first of all, and I think longs were probably in the area of support. That's last week's low, up to the new high this week. 79% level overlapping with 4-hour support here. This could well be the bottom of the day to move back up, okay, for gold. All right, so this is for those coming in late. We do have later in the day the US unemployment claims. Now, it wasn't last week, but the week before that, the figure most definitely on the unemployment claims came out and affected the market quite aggressively. So the market's definitely going to be looking at unemployment claims, because if this ticks up aggressively, that's going to suggest that job figures are going to get worse if claims are higher. And, that would be US dollar weakness, because that would obviously be what the Fed maybe is looking for. Weaker data, weaker job figures, more unemployment claims. That all kind of helps the theory of data is getting weaker, and we can at some point cut interest rates. So the market would be definitely looking at that. And of course, it's going to be looking at the manufacturing services data here as well. Because if those figures are weak, that's obviously going to, bode for the economy getting a little bit weaker in the face of strong interest rates, and inflation may well, assist the overall theme that inflation may be ticking down. All right, so be very aware of the data coming out later in the day. This can most definitely affect the market. All right, but what we definitely have been seeing over the last few days is a bit of US dollar strength coming back to the market. We did have the FOMC minutes come out early in the day. I didn't read them myself, but I just heard generally that they were maybe rather suggestive of, interest rates may be staying a little bit higher for longer. So the market's had a little bit of a reaction to that theme. All right, and I'm, in general terms, if I just go back to the Eurodollar, I am thinking myself that maybe the bullish nature that we've been seeing, say, pairs to the US dollar. It's just coming back into that area at the moment. We've just moved back up within the overall range that we've been forming over since March down into April. The range has been predominantly here. All right. There's the range. Maybe a double top forming here of that range, just short of 79% level. So to me, it's kind of suggestive that a lot of the pairs to the US dollar have just come all the way back up within this selling range to maybe top out to put in the next down range. Okay, unless we start getting data from the US that's predominantly weak, which is going to be a lot more suggestive of getting an interest rate cut soon, then that could well be the pattern that we're seeing at the moment. So I'd be interested to see what the data brings today. And, apart from today at the moment, which today hasn't finished yet, we are, last 3 trading days have all been negative for the euro dollar. All right, I'm going to wrap it up there. Just to let you know, next week, webinars from myself will be on Tuesday for analysis. I just have it over to the webinar page. There's the link. So 28th analysis, 29th I'll be going through risk and trade management. All my webinars at 7 p.m. Sydney time, and then more analysis next Thursday. So if you want to join me, just head over to the webinar page, register your interest. I look forward to seeing you. So with that in mind, have a great rest of the trading week. And if you have the time, I look forward to seeing you next week. Thanks, everybody.